Hello everyone, I hope you're keeping warm and dry this rather dark and rainy day in Sydney. Welcome to Kalkine TV and the Smart Market Insights show. I'm Sage, and today we'll be shining some light on the key takeaways from RBA's April monetary policy meeting. And the Reserve Bank of Australia announced its third monetary policy decision for 2022 yesterday. Largely in line with market expectations, the RBA has kept the cash rate steady at 10 basis points and the interest rate on exchange settlement balances at 0%. Thus, there are no significant changes announced in this month's monetary policy decision. In his monetary policy speech, RBA Governor Philip Lowe touched upon inflation and the related supply side issues. Governor Lowe highlighted that bond yields and expectations of future interest rates have increased in response to Russia's invasion of Ukraine. And unlike many other countries, Australia has maintained interest rates at a record low level of 10 basis points for the 16th consecutive month. Despite no strong hints from the RBA, rate hike expectations are building up in the Australian economy, visibly affecting the bond markets. And Governor Lowe gave a sneak peek at the factors keeping the Australian economy afloat. The most challenging aspect facing the Australian economy is a rapid rise in inflation, which is faster than the rise in wages. Therefore, the RBA has set the target band of 2 to 3% for inflation before raising interest rates. Most aspects of the economy seem to be in good conditions, including a strong labour market, gradually rising wages growth and highly accommodative financial conditions. Notably, the unemployment rate fell further to 4% in February and underemployment reached its lowest in many years. Governor Lowe also highlighted that inflation rates in Australia have been lower than in many other countries despite rising prices. And currently, headline inflation stands at 3.5%, while underlying inflation is at 2.6%. Though the RBA gave no clear signs of a rate hike, the central bank's reluctance to raise rates seems to be easing, and experts suggest that Governor Lowe abandoned the long-used term patient when discussing a cash rate hike. The RBA had frequently stated that it would remain patient and observe ongoing factors before introducing a rate hike. However, this time, the RBA appears to have stepped down from its cautionary stance, with the possibility of rate hikes being nearer. Additionally, Governor Lowe did not touch upon the $8.6 billion Australian dollar aid announced in the previous week as part of the budget to combat rising costs of living. Prime Minister Scott Morrison recently introduced a sizable fuel excise cut in its cost of living package. Some experts believe that the cash splash is a gateway to tighter lending restrictions in the coming months, thus the market expectations of a rate hike in May could rise considerably given the ongoing inflationary pressures. And thanks for joining us on that report, but that is all for now, and we'll be back again with the exclusive Smart Market Insights show soon. Till then, keep watching for more of these live expert talks and market insights. Sage signing off for now.